Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. What is up? How's it going, everybody? Ted here with my little thing called Bodies and Wicks. In case you're new to me and new to this channel, I do kind of like a podcast thing, I guess you could say, a journal. I don't know, but what I do is I take a look at different things in the market, such as precious metals, forex pairs, indices, things that you can pretty much trade on MT4 or any other trading platform that you may have, and analyze it and give you my thoughts. Not been trading for maybe about since May, but I think I feel like I have a pretty good grasp on things. Some people think I do. I'm not the best, but I'm still learning. So I just throw my ideas out there, and hopefully you guys can dig what I say. If not, maybe you guys can give me some ideas too. Feel free to leave comments, and let me know what you think. You can always subscribe if you want to see more. I don't know where the buttons are. People say they're below, so I'm just going to point below and say, hey, there's something below where you can press and hit subscribe. But today we're going to talk about gold. All right. And happy Sunday. So what has been happening with gold? Gold has been going pretty crazy the last, month or two. But right now it's pretty much at a very, very critical state. It's in an area to where it's going to have to make a move, and those moves are either going to be for the better or they're going to be for the worse. But and it might take a while before those moves happen, but we'll try to get through it. So first, let's go ahead and swap on over here to some charts. Right now what I got is the weekly chart. So we have closed again on the weekly, even though we were still kind of lower. We have still closed above that 2011 high. So that is a good sign that we're still going in the right direction. We did have some crazy movements within at least the last year. It's been solidly moving up, and now I'll go to my chart that I have marked up. So oops, let me make sure that didn't screw anything up. It did not. Okay, so this is my chart that I have marked up, trying to show you a little bit about what has been going on. So ever since probably around, I'm going to say it was June. Yeah, June, we started making the steady run up, right? And we kind of dropped off, in that moment as we were heading northwards, because the volume-wise anyway, because we were heading toward the top of the channel. So I think people had already, we had the accumulation area right here, right? So this is where probably a lot of people were setting up their longs or their shorts. More than likely, they were probably setting up all their longs and position traders anyway. And then once it kind of got out of this area, they just decided to let it run. This is where I think a lot of the scalpers came into play. But then that's where it ticked up, and you really see the volume kind of tick off toward here. Until right about here, you can kind of see, if you can see the volume down here at the bottom, you can kind of see the volume pick up right around there. And the reason I think the volume picked up a lot is because we finally crossed that top channel. So if you pull this way, you run this this trend line, going right across the top here, going back since February or so. That's when gold finally jumped across that trend line. After it jumped across that trend line, then you started seeing the volume go up because we started having a little bit different of a direction. And if you, that's where I pulled my fib. I wish these things would stop moving. I pulled my fib from that bottom area from when we stopped doing the we hit the top of the channel. We did the accumulation, we went sideways, and then we made the move northward. That's where I pulled my bottom trend line from, and that's also where I pulled my fib. So if you want to take a closer look at this, let's move in here. As you can see, this last area here that we've been in, after it made this giant drop, what it did is it came down, hit the 50, right? The 50 was also at the exact same mark as the trend line, and I used the magnet to connect this part and this part. I mean by this part, I guess I could mark them out for you guys, huh? This little spot right here. Well, the magnet is not fun when you're trying to draw an ellipses, that's for sure. That spot and that spot down there. So I connected those two. That was a trend line. Whenever it made its drop, if you study smart money traders will always tell you there's always there's usually a retracement of about 50%. And that includes anything, an engulfing candle, things like that. You'll usually see a retracement of about 50%. So once we hit the peak, retraced about 50%, and then it, made its move up. The interesting thing about it was that one big move up, we had an engulfing candle just after that. So to me, that signified some better movement ahead. Now, and it did move up. It rested right on this 38.2 basically. So then we had basically some wedges form, right? We had that wedge form, moved up. It got across this, so this resistance here, and then it kind of made it support for just a short amount of time, and then it jumped up. And then now it was resting on the the 236. So now this became the new support, only for a very short-lived amount of time before it finally fell back down back to the 382. So these are basically your support and resistance areas right here, and I don't even think the trend lines matter because I drew this trend line from here to here. It didn't. I mean, it jumped right through it for this part of it, and it kind of stayed along that trend line. This trend line here, it was going up. I also drew a little dotted trend line here. It almost respected that. So the reason I have these trend lines here is just to show you that the gold really doesn't really care about trend lines. They're gonna break it. What it does mostly care about, it cares about the support and resistance zones. So I'm gonna jump over to this one, and as you can see, the different zones that where it was prior and where it doesn't want to be in now. So as you can see, what this zone that we're looking for, the zone that it needs to get above, right? It needs to get above this 1955 area. If it can get above this 1955, 1960 area, then it'll probably stay, in this zone here for a little bit before it decides to jump, or it'll probably maybe even be in this area here in between 1976 and 1983. So, and I think if we go back to here and we look at, if we can, I would say pay no mind to the support and resistance and the fib lines and the trend lines. But if you actually look at the moving averages, I don't have them here, but if you look at the moving averages, you see that whenever in the last day, right, whenever it did that last dip, it hit that 200 moving average, right? So it hit that 200 moving average. So if it was going to actually break below that 200 moving average and close, we probably would have saw it go the other way. But it didn't. It bounced back off of it, started going up. So this tells me that we still probably have some bullish momentum going forward. But for that bullish momentum to move forward, we gotta get above this 1950 area right here. As you can see, there hasn't been many 4-hour closes above that line. There's maybe been about 3, and it's been a huge just here, let me draw a little. There we go. Let's make it a little bit more solid. Let's get rid of this. Let's hide this fib, actually. Oh, didn't mean to do that. Well, anyway, that wasn't supposed to work, but it doesn't matter. I always like looking at a clean slate anyway. So, didn't hide all of it. I just wanted to hide this one. There we go. So, if we look at it this way, you can kind of see, I think I drew too many lines. This is the area that I'm talking about here. And this is the one I want to make a little bit more solid. Yeah, that's good. So you can see there's not been too many 4-hour closes above it. And then this little gold one is the next one here. So this is the area that it needs to cross, right? Because if it doesn't, these other trend line, I don't even know if this is a trend line. Let me just delete that out of there, because we have the 50 moving average that's coming right above it, right? So you got the 200 below it, the 50 above it. So it's going to be basically a game of tug of war right through here, which strangely enough was also that fib that I had drawn. Oops. The main fib. So we'll have to see what I would say, especially if you're going to be trading this. I wouldn't trade unless you actually want to trade the range. So if we want to get in here, this is an hourly chart here, but if you want to get down to it and go like a 15-minute, what you can do, and it's honestly what I did, is wait till it breaks one of these little support resistances, buy, or wait till it comes back to retest. And even then, you're not guaranteed that you're gonna always win if you buy on the retest. Because look at this, let me see here where it's at right now. It's kind of just sitting on it's basically sitting on a support and resistance level, and that is bin resistance turn support, and then bin resistance turn support, bin resistance turn support. So it's on this 1937 line. This is one of those lines. So to be honest, I personally want to see what the move is going to be like. If I would wait to see how it reacts against the 50, and if the 50 pushes it below the 200 and closes below the 200 on a 4-hour, then I would say you're more than likely going to see a bear market, and it's going to start going down. Where would it go down to? That is a good question. Always look left. So I would guess, to be honest, I don't think it's going to get any lower than where it already has been. If it does, I do have this area drawn here, And the reason I have that drawn there is because there is an imbalance in there, and the market does like to go back and reach imbalances. And also there's, probably your last line of support line there too. And I remember when that happened, this little line right here kind of went sideways. I actually had a buy limit set for right here, because I was expecting it to do it again, to come back down and then come up, and then it just kind of kept going up. So I missed that chance, but I did have some, I was ranging it through here. Price shouldn't have been. That was a little bit risky, but I was ranging it, trading the range anyway. But if I were to take a guess on where it would come down to, I would think somewhere around this 1834, 1831 level, something like that at least. Only because that is there is an imbalance there. It would probably fill that imbalance. If you know anything about smart money trading, you always look for the last down candle before going back up. So you could say it could possibly go to here, because you see this kind of push back. And usually when that happens, it's because the institutions are in play. They'll see that it's rising, and what they'll do is they'll sell to try to get other people to sell along with them. They'll push it down, they'll get rid of their positions, and they'll automatically turn it back up. And there is actually good reason for this probably to be one of those if it does come down to this level, because look at the bottoms of the candles. There's no wicks on them. There's no wicks on these candles, so that's literally a sell to a buy right on that candle. So those are the kind of clues that the institutions give you, is they will do that exactly on the changeover of a 4 hour, so that they know that's where they actually went with their last sell. So I do believe that probably is a smart money play. The only thing is that whenever this came back down, they could have got rid of their position. So they'll sell, right? That way they can buy and make more money, and they'll hold those positions. But what they'll also do is sell and then let go of those positions, basically at zero. They don't, make any money off of them, but they'll make more money off of, the position that they had on the buy. So, and this is also where, kind of the area where the volume picked back up. So, like I said, if it were to drop below the area that it's already at, which, the 1872, it wouldn't drop too much lower. The funny thing is that whenever it hit this, and it hit this on this 50, it also hit this candle going down right here. So this could possibly already have been the smart money play, and this was the last candle that the institutions were holding that sell, because they can handle that drawdown. They can handle almost 1,000-point drawdown if they need to, because they have millions and millions of dollars. But once it starts dropping and all the retailers and everybody else starts selling, that's exactly what they want to happen. And then once it gets down to the very bottom, they can push just a little bit harder and then get rid of that position that they were holding and then buy. And then, they only lose a little bit probably from in here. But even then, you have another sell candle here. They probably could have had a position up here to force everybody still to buy down, and got rid of it too. So there's some smart money plays in here, that's for sure. Where they're at, it would take some digging to find out. But as a retail trader, what I would say, I would be looking at these zones here, right? Making sure that for one, it does cross this 1937 area, or at least stay above it, and for probably a good while. When I go back to this one and you look at the RSI or anything, you don't have any divergence. Not that I have seen anyway. Everything has been pretty much spot on as far as the strength goes. Right now the strength is a little bit below the 50, but that's It's typical. It's going to happen. Also, the thing with the MACD that I saw in the 4 hour, if it, well, you know what? I think I have to do this, and then I have to do this. That's what I have to do. So you've had this upward momentum, right, ever since, at least the signal and the MACD lines have been above zero for a very, very long time. Let's see if we can go back so we can find it when it crossed. So it crossed back in June 10th. So we've kind of had this upward momentum ever since, and when that made that huge pullback is finally when it crossed over, right? So crossed over, had the momentum shift up, and then it shift back down, and now it looks like, more than likely it's, you see the momentum going back up, so it looks like it could be pushing it back up, to go long. But I think what we're gonna have to do is really, really look at those moving averages to see. And to be honest, I wouldn't touch this until it breaks this 1952, which is also right now the moving average of the 50, or it breaks below the moving average of the 200. And even then, be careful with how far that could go, because I don't think it's going to go too much. I mean, it could make a pretty good drop. I mean, 1815 is a fairly decent drop, but I'm still very, very bullish on gold. I think we're only seeing the beginning of it, and I think that's why it's been kind of crazy, because people don't know where to go with it. People think that, it's had its run, it's done for. So there's a lot of people selling in the play because they think it's just gonna go right back down, and it's gonna crash, and it's probably gonna get back down to $700 and an ounce, and but I think there's a lot of people thinking the other way. I think that we're still on the good side of this trend. It's going to take a minute, but I think it eventually pushed through, and I think we should probably go long in the long run. And if you get a good hello, I can't talk. If you get a good position that you can find to go long, I would definitely take it, but I would make a pretty small stop loss, right? I would make it, and again, I would wait for a 4 hour close, and if you're going to do position trading or something like that, if you're going to do scalping, then play your game how you usually play it. But if you're going to be doing a position trade, always wait for those 4 hour candles to close, and make sure they're closing along with the trend lines, or along that support and resistance. And again, the area 1953 needs to be broken, and then once that 1953 needs to be broken, the 1982 needs to be broken. Then once the 1982 is broken, then you got the 2014 that needs to be broken, right? So these are the different levels that need to be broken on a 4 hour chart, and even when they're broken, be careful with it. Check whatever kind of indicator that you like to use to try to confirm that. Generally, I like to use the RSI. Generally gives you some good indicator on strength. So you can tell with this area right here, when it finally did break, I think it was the other one that we're on now, right? The 1937. The 1937. It was, the strength there was less than 50. So you can tell, even though it was above it, the strength wasn't too high. So, it kind of dropped back down a little bit. And then just before we broke it again, we got back up, right? So we got back up to around 50 as it was breaking this 1930 or this 1950 mark. So that's what pushed it above, and we were able to stay above. And then, as you can see, as we started getting toward here, and it started hitting this as the support, then it started losing its strength. As you can see, this one, it definitely lost its strength, got down to 40, and then it just dropped. So RSI is always a good indicator for me to let me know if it's going to actually be able to stay above or below that resistance. I always also like to check the MACD to see how the momentum is going, if it's changing directions, or if you think if it's going to be going the opposite way. But personally, I think we're eventually going to go long again. And it's going to be these key areas that we're going to be looking for in going long, right? These are the zones. These are the zones it has to make through. Play in these zones, make it through that one, and then above and above. So anyways, that's all I got for y'all today. That's my 2 thoughts on gold over here. If you enjoyed the video and enjoyed my rambling and my nonsense that I had to talk, but hopefully you got something out of this. Hopefully I'll see you guys soon. I'll probably be doing a video next. I already did one on the S&P. Check that one out if you want. And I'm probably going to be doing one on probably the NASDAQ. Probably some Forex pairs. I want to check out cable, GBP USD, Euro USD. Definitely need to go over the dollar because dollar's in a weird position also right now. So stay tuned and check out some of my videos if you want. All right. Thanks, guys.